Hello traders, and welcome to our edition of Tactics and Analysis for Thursday, March the 9th. The Canadian dollar has been losing value consistently against the US dollar since the last week of February. The Loonie, as the Canadian dollar is known, has long been viewed as a commodity currency. The combination of pressures in the crude oil and gold markets have helped to destabilize the Canadian currency the past week and a half. The addition of a likely interest rate hike coming from the U.S. Federal Reserve next week has also had an effect. The Loonie will stay volatile for the foreseeable future, particularly as gold speculators are put under pressure and oversupply concerns in the crude oil sector lingers. Economic data from Canada has been stable the past month, but it has also been lackluster. The gross domestic product figures from the nation last week met expectations, but growth remains rather stagnant. A look at a midterm chart of the Canadian dollar shows a currency which has gotten weaker the past month if traders have stayed patient. Also, last week, the Bank of Canada maintained their current interest rate policy, which effectively puts the Loonie under pressure regarding the next moves from the U.S. Federal Reserve. Both Canada and the U.S. will issue their monthly employment reports tomorrow. A long-term view of the U.S. dollar and Canadian dollar is interesting. The Loonie is now approaching resistance levels it tested in February of 2016. While many investors may have already positioned themselves for an interest rate hike from the Federal Reserve next week, it is the Fed's statement which could steer the forex markets further. If the Fed indicates it remains hawkish and is considering another interest rate hike sometime in the summer, the US dollar could continue to strengthen against the Loonie. Traders may want to buy the US dollar against the Loonie in the short term. The combination of volatility in the commodity markets and the shadow of the US Central Bank will make this an interesting opportunity. And traders need to practice risk management and be alert for volatility, which is certain to come. The short term could be negative for the Canadian dollar. Midterm and long term, we are unbiased. Thank you all for watching our Tactics and Analysis. We wish you all a wonderful trading day, and we will see you again tomorrow.